There's a three-part formula for managing trade size and capital reserves effectively. Your approach needs to focus on three key areas: your trading system, your capital allocation, and the market conditions you're working with. If your trade management doesn't cover all three, achieving consistent success will be challenging. Let's break down each part of the formula. Part 1. Trading is a numbers game. First, let's talk about your trading system. Trading is fundamentally a numbers game. Your success is determined by the probability of winning and the risk-to-reward ratio. Our approach begins by developing trading systems tailored to specific strategies. For example, we categorize our strategies into three groups: income, capital gains, and hedged strategies. Each strategy is designed to fit within the framework of the Indian capital market. This ensures that we're not just trading, but trading smart. When you approach trading this way, you're setting yourself up to win more often than you lose. And that's key to building consistent returns. Next, let's discuss capital allocation. Having a good strategy is only part of the equation. You also need to manage your capital effectively. We divide our capital among the three strategy groups: income, capital gains, and hedged strategies. Diversification helps spread risk and maximize returns. Here's where the numbers really come into play. We target 8 to 10% returns every month with a success rate of 70%. To achieve this, we maintain a risk-to-reward ratio of 1.15 to 1. This means for every 1,150 rupees we risk, we aim to gain 1,000 rupees. This ratio is crucial because even with some losing trades, the overall strategy remains profitable. Finally, let's address market conditions and risk management. Trading isn't just about making money. It's also about protecting your capital. We provide an additional 5% capital over the margin required by exchanges to account for potential drawdowns. This extra buffer ensures that we can handle the inevitable rough patches without getting knocked out of the game. Now, let's look at an example to bring this all together. Imagine you start with a capital of 1 lakh rupees. With a 70% success rate, a risk per trade of 3%, and a risk-to-reward ratio of 1.15 to 1. Here's how you would manage your trades. Risk per trade, you're risking 3% of your capital, which is 3,000 rupees per trade. With a 1.15 to 1 risk-to-reward ratio, your expected gain on a winning trade is 2,600 rupees. Over a year, you plan to make 52 trades or 1 trade every week. So, what's the expected outcome? With a 70% success rate, you expect about 36 winning trades. That leaves you with about 16 losing trades. Accordingly, the profit is calculated as follows. Revenue: 36 trades multiplied by 2,600 rupees or 93,600 rupees. Cost: 16 trades multiplied by 3,000 rupees or 48,000 rupees. This gives you a net profit of 45,600 rupees or 45.6% return on your capital. This example shows how a disciplined approach to managing trade size grounded in solid numbers leads to substantial returns, even when some trades don't work out as planned. So here's how to put this formula into action. When you're managing your trade size and capital reserves, make sure you're focusing on all three elements. Develop trading systems that work with the numbers. Allocate your capital strategically across different strategies. And then manage your risk by providing a buffer for drawdowns. If you're serious about creating a reliable trading system that generates passive income, we invite you to try our trading system and training program. It's completely free to get started, and you'll receive 3 months of free access. During this time, you'll have the opportunity to test the system for yourself and see how our weekly trades perform. You'll experience firsthand how we manage trade size, capital reserves, and risk to consistently achieve our target returns. This is the perfect way to get started on your journey to building a trading system that works for you, creating a second line of income with minimal effort. There's a link below this video where you can get all the details and start making your trades work smarter for you.